Well, the headlines are loud and the markets are messy. It's been a pretty volatile couple of weeks here. And I know a lot of people are wondering, what should I be doing? Do I need to be doing something, anything? What can I do when the markets are behaving like this? Well, today we're going to talk about what you actually should do. Let's explore 4 questions to kind of ask yourself and make sure you're answering these to make sure you are on the right track. Welcome in. This is Perfect Game Retirement. Ben George with Ryan Ledden, certified financial planner at Black Oak Asset Management. And Ryan, we got a lot going on in the market. I guess that's a very, calm way to put it. Maybe understating it a little bit, but it's been a pretty interesting April for sure. And I'm guessing maybe you've had a few phone calls. You've talked to some clients about this so far.
We have, and it's funny when the first big amounts of volatility hit. I was actually on spring break down in Clearwater. Of course, that timing always happens, it seems like. So there was I think it was a Thursday and Friday of spring break. And then the following Monday, then it shoots up, the announcement of a, 90-day deferral on some of this stuff. So there's constantly going to be more and more and new headlines coming out. It's just almost like, what are we waiting for today? What announcement's going to happen today? So we did get some emails and phone calls. We have a great book of business. We have great clients. Did they call and maybe ask questions? Sure, absolutely. That's when we earn our keep as advisors. If it just went up 10 to 15% every single year, then we probably wouldn't have a job. But that's how we navigate these waters and educate and talk about and just reassess where people are at. And so, yeah, we had some phone calls. I've had some conversations, but I haven't had anyone, panic sell or do anything crazy. Actually, after those 2 really big dip days, I had, a bunch of clients basically call and say, hey, I want to put more money in. So I'm like, bravo, kudos to you. And I'm glad they have that mindset of, buy low, sell high, which is difficult to do. Our natural inclination is to do the opposite, but we want to jump on that bandwagon when it's already going really, really strong. So yeah, it's part of the job, and then throw in tax time. It's been a lot.
Yeah, it has. It's been a pretty, this year in general has been pretty crazy, but the last few weeks have been certainly something that I think everybody can kind of get a little uncomfortable. Even if you do have a pretty good plan in place, you can't take away the emotion completely. But instead of reacting impulsively, we want to ask some questions, and just making sure you're addressing these things will help make sure you are on the right track. But before we do that, Ryan, I know we've teased it a little bit that it's coming, but your book is finally here. I know you put a lot of effort and time into this, and it kind of ties in what we're doing here, because it's called Diffuse the Retirement Threats. And part of that is kind of preparing for markets and just making sure you're avoiding these things that could give you some trouble in retirement.
That's right. And it does kind of play, because every chapter that we write about, there are a bunch of threats, if you will, that could impose its will on your retirement planning. So that's what the book is about. It's got some action steps in there as well. So yes, all of our materials are in, supplies are in. Not only is there a book, there's 4 or 5 PDF reports in there. So we're just trying to provide education. And if you want to have a conversation after you receive our kit, the Diffuse the Retirement Threats, we'll be happy to have a conversation. But we're trying to just provide as much value as we can, whether people move forward with us or not. So there's zero obligation to do so. But yeah, we'd be happy to send those out now that the supplies are in.
We're going to drop the link in the show notes, so make sure you grab that and take your hands on that. I know Ryan's put a lot of time into that. It's not a super long read, but it's not just a couple of pages either. There's some really good information in there, and we appreciate you just being a part of the show and just tuning in every week. And whether here on YouTube or the podcast, is kind of a way to say thank you. But let's jump into these questions, Ryan, because I know these are all super important, and we all have a little concern, right? And if you are someone that's a little uncertain with where we're headed right now, this is a perfect conversation for you. So let's start with the gut check, right? When was the last time you checked your plan, and does it still make sense? You got to revisit these things at a time like this if you're truly concerned.
Yeah, first off, do you have a plan? Much less go back and check it. So do you have a plan? And if you do have a plan, have you checked it? And I've kind of joked on this show, whether it was on the radio show or the podcast or the YouTube channel here, is, we provide a financial plan, but then we say, it's probably not going to work out this way. Like, there's always adjustments that are going to be made. But the good thing about some of the financial planning software is you can run below average scenarios as far as returns go, middle of the road, very average, or above average. And so you can run those scenarios where it says, hey, even if we're way below, hey, we're in good shape. So sometimes we just have to revisit that with clients if we do a financial plan and they're having some questions like, hey, are we still okay? We go back and revisit that plan. We update their account numbers. And that's what's so useful about some of the financial planning tools that we use. We can aggregate everything in. So if someone is still working and still has a 401k, we can pull that information in. We can see that. We can have it updated. It's not like a real-time update, but it's usually after the business day. So it's daily. It's just not by the minute updates on people's 401k, but we pull in all their Schwab data that we have with them, and we can update their plan accordingly. So there's a lot of work on the front end to get the plan together, but once we have the plan, we can continue to keep this updated because it's not static. It's never going to be static from a financial planning standpoint. Things change, life happens. I mean, there's always pivots, adjustments that we have to do. So, revisiting that plan or creating a plan will probably give you a lot more peace of mind during these times of volatility.
Yeah. So gut check first up. Now, next thing to do is get real about risk. I know, Ryan, you have conversations with people when you're planning and you go and run the different scenarios of what could happen. I think a lot of people that haven't been planning say, oh, I'm comfortable with risk, but how true is that for you? And these are the kind of moments you really find out if you can handle the big swings.
That's right. When the market's going up, people's risk tolerance tends to grow. And so we want to make sure that, okay, if we change things around, but here's how far it could go down. And you want to put percentages, but you also want to put real numbers to those situations. And sometimes percentages are one thing, but then hard dollar amounts, you see that and you're like, ooh, so how would you react if you open up your online account and saw that it go down to this? Would you want to see that? Well, no. Okay. Well, that's fine. Let's adjust. Let's make adjustments. So if we do make adjustments, that top side's got to come down. So it's a give and take relationship with standard deviation or risk. There's a top side and a bottom side. And so depending on how many standard deviations out you go, which sounds very nerdy, but there is a huge math component. I know there's a lot of emotions when it comes to people's money, but there's a big math component if you are structured properly. There is a math component to where your portfolio is going to go. Now, it can't account for some catastrophic, I don't know if you saw other Netflix, 0 Day. I don't know if you saw that on Netflix. Good show. Robert De Niro is a former president, and 0 Day is like basically a blackout of everything, transportation systems, markets, everything, like just the technology Armageddon, if you will. So good series. I like it, but so it can't account for something like that. But as far as everything else, it can somewhat account for from a math standpoint. So yeah, you want to make sure you know what your risk is and not just think you have more capacity just because the market is doing this. You need to really have a gut check on when the market's going down.
Yeah, so just make sure your portfolio is still aligned with the risk tolerance. And again, that's something you can do at Black Oak Asset Management. If you haven't sat down and done that, again, go to speakwithryan.com to schedule a time to meet with him. It's very simple to find a time on his calendar, whatever works for you. All right. There are a lot of things you can do in terms of just making sure you're in a good spot, just revisiting things, but also there are some strategies in times like this. I know you've talked about some clients that came in and said, hey, I want to maybe put some more money into the markets right now, but what opportunities exist in down markets like this, Ryan?
Yeah, again, easier said than done, but I mean, when it's on sale, and I don't know, that's some of the questions I had, like, is this going to go down more? That's where we're like, we don't know. But I do know, I mean, depending on what index you looked at, after some of those days of volatility, it was down anywhere from 10 to 15, sometimes even more percent. So I'm like, I don't know if it's going to go further. It may, but I do know it's 10% cheaper than it was a few days ago, or 15% cheaper, or whatever that number looks like. So yes, if people have that discipline, if they have cash sitting on the sidelines. So I had several people that just were maybe in a money market earning some interest because obviously the interest rates are still up where they're at. And so some of these money market accounts are paying a little bit of money. So some people were selling a little bit of those and then putting it into the market. So that's one way to look at a buying opportunity. But yeah, I mean, rebalancing, that's kind of our job internally. Tax loss harvesting, not to get too much in the details of it, but it's basically selling something, capturing the loss, and then later maybe getting back into the market. So you don't necessarily just have to do that at the end of the year. You can do that throughout the year. So that's another thing from a tax perspective and non-retirement type accounts that you could take advantage of. So anyway, so there's a lot of opportunities throughout the way, not just dumping money in when the market is down. There is, you could put a lump sum in there, but then maybe dollar cost average over a few days or a few weeks. There's other strategies that you could do. But then again, our job is to rebalance and keep things where it should be in alignment with your risk tolerance.
Very good. All right. Last thing you could be doing if you've seen your portfolio take a hit, you may be a little concerned is, look, let's cut out the unhelpful behaviors. And, quite frankly, Ryan, we all have habits or behaviors that we'd like to get rid of. So what are some of the ones that you see that people can maybe try to fix now in times like these?
Yeah, I mean, obviously with social media, clickbait, news, all that kind of stuff, it just, again, the social media economy is different than your economy, your household. I did have a review meeting with one of my older clients who doesn't have a lot of risk capacity and has very little risk tolerance, which is fine. She doesn't need to. She doesn't need to take on that. She has great sources of income. She's like, oh gosh, let's go over how far down I am. And it wasn't much at all. So that's where the re-education part comes in for my job is, hey, just because the markets are down 10, 15%, it doesn't mean you're down 10, 15%. You may be, but that just depends on your risk tolerance. But this client of ours was not, she wasn't down hardly at all. So again, she's like, oh, just kind of like made her day. So I'm like, turn the news off. Like, stay informed, stay educated. But man, some of these headlines, it's preying on the fear of people that this is the end, and it's not the end.
It's a crazy time for sure. And, look, it's tough when you're in the middle of this kind of volatility and you see these big downturns, but we know it's going to happen again, Ryan, right? We don't know when and how it's going to take place, but we know the market will go up and it will go down. That's just what the market does. So again, the best thing you do is put a plan in place. And this is a great time, if you haven't began planning, right, Ryan, to kind of get in and start taking a look at that and putting together a plan that puts you in a better position next time this occurs.
Yeah, it just a lot of times it creates peace of mind to know that these things are going to go up and down. And most people know that. It's just when you're in the thick of it, sometimes it's tough, especially if you're about to retire or if you're in retirement. Again, people who are working like us, Ben, you just I don't think anything of it. I just kind of keep plowing forward and do what I do and take care of my clients that we do have. I can't even remember last time I looked at my stuff. I mean, I would put money in, but I'm not like, oh, okay. How much? Don't do it. I don't do it. So, a little bit of ignorance is bliss kind of thing, but, I keep up with my stuff, but obviously I have a huge responsibility to keep up with a lot of others. So I don't worry about stuff like that because it's kind of funny. Obviously we had a connection with Dave Ramsey and the SmartVestor Pro program, but his reels and stuff come up and some of the people that call in and he's just, he's like, calm down, people. Like this is stop. This is noise right now. Could it lead to other things? Sure. But this is noise right now. So let's calm down. Because if it's not tariffs, it's going to be something else. It's going to be tax or it's going to be. So just know these bumps in the roads are going to happen. It's just we got guardrails and how far out are our guardrails depending on who we are. So just have a plan in place. It will help with this.
All right, well, if you want to get in touch with Black Oak Asset Management again, just go to speakwithryan.com. You'll be able to pull up his calendar, find a time to pick out and begin that process, begin to have those conversations, but also take advantage of the book, Diffuse the Retirement Threats. Ryan's put a lot of time and effort into this, and we think you'll get a lot of value out of it. The link's in the description, so make sure you fill that out and request a copy for yourself. All right, we'll get out of here on that note. Hopefully the markets will settle down some. I know we'll have some thoughts later in the year, depending on what happens, but it's important to plan. So we hopefully help some people out today.
That's right.